The decentralized finance narrative, or DeFi narrative, has long been asleep in the crypto space. Really, not since March of 2020 has this specific narrative had much traction, but with everything, things run in cycles in the crypto space. Now, the AI narrative was long asleep for more than 2 years before it was thrust into the limelight by ChatGPT, and we all realized how fast the future was coming. What many are also asleep to is that smart contracts can allow finance to do things that weren't even ever conceived before. One such company with the most revolutionary idea is a company that is joining us today to talk about this idea. This idea could be the biggest new financial tool in 60 years if successful. And I think it's going to be successful. Stay tuned. You do not want to miss this interview. I would say this is one of my episodes that I'm the most excited about. Now, do note this is not a paid or sponsored video in any way. I do own a lot of Bumper and want to buy a whole lot more. I love bringing to you interviews because interviews are the best way that I can bring the team to you so you can get a feel for the people behind the company as directly as possible. Welcome to the Crypto Rain channel. I'm your host, Jay Rain, and if you like money in crypto and you're looking for a seasoned investor's take on the crypto market, join the Rainmaker family. Do know I'm not a financial advisor. I'm a crypto investor myself. We do want to give a shout out to our Patreon members. We have a private Discord that our Patreon members get access to. And Bumper was on my list that I discussed with my closed Patreon in December when prices were low of this is one I personally want to buy a whole lot more of. Now make it rain on that like button and strap in for the show. And let's welcome our guest, Jonathan Decarteret from Bumper.
Hey, good to see you. Good to be back on the Crypto Rain show.
Yes, I am very excited to have you back. My audience has been requesting over and over again to see if you would come back. They love your project. I love your project. Yeah, now some people haven't seen Bumper, or maybe they haven't been part of the family that long, or they just came across this video. For those that haven't or aren't familiar with Bumper, what is this new innovation that Bumper is doing?
Well, to start with a very kind of simple idea then, one of the most worrying, anxiety-driving sides of owning cryptocurrencies is when the price drops. And Bumper is built to be a protocol which protects you from price drops. Now, when we talk about risk and trying to mitigate volatility risk, that is one of the biggest problems in any financial market. But quite simply, what Bumper allows you to do is send, say, your Bitcoin to the protocol. And if you say, just theoretically, the price of Bitcoin was $1,000, you could set a floor of, say, $900, and the price of your Bitcoin will never fall below $900. You will pay a premium for that. But that premium, as we'll hopefully talk about later, is going to be cheaper than has ever been offered before in any financial market.
That is such a concise summary. What's exciting to me about this is there's been other mechanisms before, right? So a long time ago, they're like, well, one of the ways of solving this problem of how does a fund that can't afford to lose billions and trillions of dollars because people's retirement is in there, how do they invest in something and protect the downside protection? Well, one way to do it was to buy insurance, that they would pay a really hefty premium to an insurance company, and the insurance company would hedge against that loss, but the premiums were so expensive it made that option cost prohibitive. Another way is just simply put in big stop losses, right? Which is the tool that the markets used for 60 years. Like stop losses came about like 60 years ago as, hey, we can just put, if it hits this price, we sell it, and mechanisms to automate that. That was amazing new technology. So why is it this idea? Why is this so new or novel? What's so new or novel about this idea?
Okay, so let's go back in time a little bit to answer that question. If we go back to 1973, two university professors called Black and Scholes published a seminal white paper. And in that paper contained the Black-Scholes equation, which was an equation which allowed you to rationally price risk. So what that means is, if I own Bitcoin, I'm worried the price might go down, I want to buy some protection for that Bitcoin, the person who's going to sell you that protection would use the Black-Scholes formula to calculate how much that protection should cost. Now, that turned out to be a massive breakthrough in financial thinking. They actually won the Nobel Prize for economics for that paper, for that equation, and it gave rise to option desks, which we have today, which are gargantuan. That is a $13 trillion global industry. It is massive. When DeFi started to kind of come about, we, my business partner and I, and stakeholders sat round to think, is there a better way to offer protection, a more efficient way, a cheaper way, a fairer way that utilizes all of the new piping that you get within DeFi? So, the fact it's electrified, the fact that it's, kind of extremely fast, liquidity moves very quickly, it's very low latency, all these kind of properties can allow you to do some quite complex things. Now, what we've managed to do at Bumper, and I want this point to sink, is we have taken a totally different approach at how you deal with risk. We have used totally different inputs, totally different equations, and the output, and this has taken us 2 years to model this in an extremely complex and intricate model that we have built. And I should shout out to that team, actually, who are some of the smartest people I've ever met. We're talking university professors, postgrads, data scientists, our own internal team. And what we have managed to do is to build a new formula that deals with risk that is very highly correlated with Black-Scholes. So if you plot Black-Scholes on a graph, ours is extremely correlated, but we are at least 10% cheaper than the Black-Scholes. And that's because fundamentally we're doing different things which are just more efficient. And we are now past the stage of concept now. We now have a green light that we know this works. And we are just in the final stages now of building out the final parts of code and getting ourselves ready for launch.
So in summary, you're able to do what they won a Nobel Prize for in the 70s that revolutionized finance through options desks and how to price that. And you're able to deliver something that through smart contracts can do it at 10% cheaper.
100%. And there's another layer to it as well. And this we think will be the killer app, or will give rise to the killer app of Bumper. So imagine if in our example, you have one Bitcoin, you've protected the price of it, say at the 90% floor, what the price is today. What you will receive back from the protocol is bumpered Bitcoin, which will be a fungible token. Now, this is where it gets interesting. You now have a special version of Bitcoin, which will follow the price of Bitcoin up, but will never go below its 90% floor. Now, you can use that theoretically to open up a collateralized debt position, and you will never get liquidated. You can open up margin calls and with high leverage, and again, reduce the liquidation risk. You can reduce impermanent loss deficiencies. You basically have a fundamental new breakthrough that can give immediate efficiencies to all the instruments that are currently out there in the marketplace. But we also think will give rise to totally new, exotic financial instruments and products that we've never seen before. And I think that's where DeFi as a general kind of space is where things are heading.
I remember when DeFi 1.0 came around, it was this new concept that I was having a hard time understanding, right? So there was this project called ETHLend, who then rebranded to Aave, and they're like, okay, you can, and they talked about DeFi, and I remember trying to wrap my mind around it when it was new, and DeFi 1.0 really took off in 2020, and there was projects like Aave. Aave went 2000x. I was just killing myself because I'd remembered ETHLend, and I hadn't invested in it. And it went 2000x, and I was like, well, shoot, that means $1,000 turned into $2 million. And I was like, why didn't I throw in $500 or whatever? Like, I was familiar with it. I didn't quite understand exactly what they were doing, but made sense. so that kind of gave DeFi like some substance that people took the time, because of the growth there, to learn what DeFi really was and what it was about. What you're talking about here takes a little bit of like understanding on the finance on how things work, which is why I love it when you join us, because you discuss it in such an eloquent way that I think anybody can understand it. So there's the cost savings thing that you discussed first, that it's just 10% cheaper to a $17 trillion industry. That's going to be a big deal. But secondarily to that, you can now do things in DeFi that are unthinkable, because if they take that bumper Bitcoin at the 90% level and they provide that as collateral for something, that can now not be liquidated, right? Because it can never go down below that 90% mark. And so if they're securitizing it at that price point, it isn't liquidatable. And so DeFi can operate in a whole new way now without being able to be liquidated for those that want low risk positions. It's amazing. So yeah, to think where that can go, it blows my mind. And what I love about this is, in crypto, I look for hidden gems. Like, I was an early investor in Axie Infinity, and I was just sure this whole idea of blockchain gaming would go somewhere. And I didn't have the YouTube channel then, but I was an investor, and I would talk to my friends, and they thought I was dumb that I was buying virtual land on the internet. And it went, gosh, what did it do? 3,000x or something ridiculous at the top from where I was buying at. And I didn't even buy at the bottom. Why? Because the concept was real. It was pretty early, and it was hard to imagine exactly where it'd go, but it did everything I thought it would and more. Bumper's one of those projects that like I've been so excited about since I read the white paper. It ruined me for like 6 months. I couldn't sleep at night thinking about this new idea and what this could do. But you're now 2 years down the road from when I first heard about this, and you guys have been working probably day and night. I know you've been working like super long hours last 6 months, because there's been a lot of things happening. Could you share with the audience what's been going on the last 6 months?
Yeah, sure. Well, the simulation we've kind of covered off, which is really the kind of cornerstone of how we specify all the parameters, the equations, and essentially how the protocol will operate. What we now have is a clear path from where we are today to when the protocol launches. We can see now that everything's demisted. We can now see the path. What we did yesterday was to turn on a liquidity provision program on Uniswap v2. What we want to do is allow people to be able to purchase Bump, the native token, with high liquidity levels, lower slippage, and just make that whole process easier. And so we deployed the contracts on the 1st of March, which will incentivize people who want to deposit Bump and USDC pairs into Uniswap pool. Not only will they receive the Uniswap fees, and so generate income from that, but we will be distributing a massive 20,000 Bump tokens per day to those liquidity providers. And what we're seeing already is that liquidity levels are shooting through the roof to make it easier for people to acquire Bump, which is going to be important when the protocol launches. There is a fundamental use case of Bump. If you want to take protection, you have to bond Bump, which means you have to buy it, you have to deposit it into the protocol. That is then returned back to you once you close your protection. You can either kind of retain that or sell that. But what it does is it gives a fundamental use case for the Bump token, which should kind of increase the network effect of the Bump token. Please, after you.
Well, yeah. So tell us more about the testing that you did and these models, because one of the things that I knew was it was a theory 2 years ago, but it needed like to be put into practice and some models run on it to make sure it actually worked like you thought it would. Now a lot of that stuff has been done, and you're moving to a place where we can provide some liquidity and get some extra benefit from that. Let's tell us about that modeling and how it resulted. You said it saved 10%, but could you tell us a little bit more about the modeling and what that showed?
Yeah, what we're going to be doing is publishing a report at the end of the month, which will be open and transparent and independently validated by kind of academic observers. Essentially, it was a really beautiful moment, actually, because we'd set our target to get that simulation completed by the end of the year, and we got to December the 24th when we were kind of just closing down for a few days. We hadn't quite got there. There were some remaining bugs, and we took about a week off to kind of just let everyone revive themselves. It's been a very punishing, kind of workload. And bless the sim team, they basically carried on through Christmas, and they fixed the final bug, and all of a sudden it started just spewing out data, and we could see this beautiful machine finally running. And people broke into tears because A, it's been a real slog. B, it's been incredibly difficult. I mean, I'm talking world-class economists saying that this is just on the very vanguard of our kind of pushing the envelope. But C, it was just wonderful to see that it not only correlates with black shoals, so there is it seems a fundamental truth in how risk is described, but that we are more efficient. And that 10% is a starting point. We think as we optimize the protocol, we can push those percentages up significantly. There are some other interesting features that have come out too. One is that as the price of the asset you're protecting, so again on one Bitcoin, if the price of Bitcoin starts to go up and moves away from your floor, then your premiums drop down, and they drop down significantly in proportion to how far the price has gone up. So that makes it a really efficient tool. If in good times, it means you're not penalized. And obviously if the price goes down, well, then your premiums do go up. But at any point, you can just close your position and take your 90% floor protected Bitcoin, and you should presumably be better off than the market. The second thing is that the makers, and these are people who supply USDC into the protocol, and they are the people who receive the premium payments as a yield. So those USDC people are on one side, Bitcoin takers are on another side. What we found is that when you compare yourself to the options desks, so we've looked at the big ones like Deribit and Ribbon and Hedgehog and so forth, is that when times are bad and the market has dropped, it is the makers, or in traditional option speak, the option seller, that get penalized and they get wiped out, which happened in November, January, February, March, April, May this year. And what we find is that Bumper actually protects those makers really well too. So in a lot of instances, they haven't had to take any haircuts, and they've stayed in the green. So what we're finding is a system which is cheaper for people to take protection. It is safer for people to provide protection, and overall, it is just more cost efficient and more versatile. So it's a fundamental step change in risk.
So part of the equation for this to be successful is that there will have to be large funds who want to provide protection, right? And they'll say put their funds into USDC, and it provides, and they'll take that protection. So what you're saying is their risk compared to if they did traditional options is way, way lower. What about their upside? Is it equivalent? Is it lower? Is it higher?
Well, that 10% that I talked about before can be pivoted. So you can either go 10% cheaper for protection takers, and makers will be comparable to what the market has right now. Or you could even it out and say, well, premiums are going to be 5% cheaper, but also the protection makers are going to get 5% more. So we can kind of pivot those. And like I say, that 10% is our starting point. We can kind of increase that.
Wow. So that's huge. So it really creates at least an additional 10% efficiency over what was there before. And who gets that 5% can be determined later, and that can even be changed over time if you're trying to attract more people that are seeking protection. So, because there are large funds out there, right? And they just want to make 2%, 3%, 10%, or whatever the numbers are. And they're like, okay, so I could place $10 billion, in this, and I can make, 2 or 3 or 4 or 5%. Fantastic. Okay. What kind of controls do you have for this? We were talking just before we went live that, well, in some of this I know from the history. So bringing back a conversation from a long time ago, I asked you why you did a token. Like, why did you do a token? You're like, well, we didn't have to. Like, we had all the requests from some of the financial industry to just fund us, and we didn't have to create a token at all. We created a token so that we could create a community around it. Am I summarizing that well?
Yeah, that's right. I mean, we turned down millions and millions of dollars worth of investment in that funding round that we conducted back in 2020. Protocols don't live because of the VCs that back them. They live because of the community that supports them and the community that actually use them. And going, just kind of addressing those yields that liquidity providers receive. What we saw in DeFi over the last kind of 18 months is kind of really crazy yields that are being generated, because, mainly through the distribution and emission of their own native token. I think now that bubble has burst. What everyone has been saying for the last 6 months is sustainable yields. There needs to be an actual business which is generating revenue for providing a service that is then distributing that to other stakeholders. And it's only those types of business that will perpetuate. And that's the game that Bumper is in for makers. There is a real world case that's generating those yields. They're not fanciful. And I think what we'll see is, and you kind of made a really sanguine point there, is we can use those yields as a kind of as a pivot point on the seesaw. So where we've got too many protection takers and we don't have enough makers, then we can skew the yields to favor them, so that money then flows in. And this again goes back to the point about DeFi, which is, the liquidity is electrolyzed. Money can move very quickly because it's programmed to do so. And Bumper is designed for that environment.
Yeah. Sailing on 2021 has a question for us. I want to bring it up. We know that Digital Mob is on board. Can you tell us how you're going to target different segments? How will you bring in institutions and allay their fears, regulations, rules, asset accounting? ?
Yeah, okay. All right. So let's talk about Digital Mob. This is the next big part for us. So we now have the blueprint of how the protocol works. That's written in modeling software. So we now need to go through to kind of work out what's called the design implementation. So there are certain functions in the simulation. We know how to figure out how to code that in Solidity. For those who are uninitiated, Digital Mob, certainly in my opinion and some of my peers, are one of the best, if not the best, development house in the world. So they have worked on projects like Maker, like Filecoin, like Gnosis, like Barnbridge, all multi-million, if not multi-billion-dollar protocols. They are at the sharp end. And they choose who they work with because they are so in demand. And they want to be paid in majority by tokens because that's going to give them the biggest uplift. They're less interested in kind of fiat kind of cash payments. We've been talking to them for a while. When we shared with them the simulation results, that then became a slam dunk for them coming on board. They dropped everything else. They are interested in this space. They see that there are other people who are trying to crack it. And we demonstrated that we cracked that nut. And so they are now into full swing, which is brilliant because they are exceptionally bright. And what we're going to be doing, indeed, to kind of like really smash this nut, is our tech team are flying out to Bucharest, where they are based. They're going to be flying out next week, where there's going to be a series, at least a week, maybe 10-day long workshops, just to kind of whiteboard out all the smartest people in the room to kind of figure out the final parts of this puzzle that will get us to launch. And we are looking to deploy the protocol and launch V1 in Q2. I hate to give dates because problems come out of the woodwork. We're already a long time over deadline, but we're getting close now, so our estimates should be getting more accurate. So that's Digital Mob. When it comes to regulations, we don't think Bumper in its current incarnation is for institutions. It is trustless, it is permissionless, it is non-custodial. So that does mean that users of Bumper, like any DeFi protocol, whether it be Aave, Synthetics, or Olympus, you don't know who you're dealing with. And so our strategic vision is to get this protocol built, get people engaged, demonstrate that it can deal with black swan events, which the simulation shows it absolutely can deal with. And then once we've got that certainty in the market and that traction, we will then build a Bumper institutional product, which will have KYC and AML filters on. It will be regulatory compliant, and it will be targeted at those big institutions that hold millions, hundreds of millions, billions of dollars worth of crypto that they have to take a fiduciary hedge on, because that is the best practice. And Bumper will be fundamentally, categorically, the cheapest, the most efficient way to do that.
I hope everyone just heard what you said. This is so exciting to me. And this is why when I was talking to the Discord group, like Bumper was the number one on my list of what I was most interested in on stocking up more on. It's always a risk. Maybe things don't come together. But every time I've talked to you, I've got this feeling, okay, Jonathan absolutely knows what he's doing, and he's onto a concept that if it comes together, and I feel more like now we've got it modeled out and we know that like the systems should be working and it's about ready to deploy. And most of the world is still unaware of this still yet. There's a handful of people watching this stream. A bunch of people will catch on the replay. Most people still completely unaware of Bumper. At one point, Axie Infinity was in that exact same location where nobody but me was thinking about it, talking about it, right? Some of the other projects that revolutionized, that use this crypto and blockchain space to revolutionize things like Aave, ETHLend, nobody was talking about at one point. So this is why I talk till I'm blue in the face with some of my friends about Bumper, trying to help them understand it. Is some of these concepts you're explaining, like I see this perfect storm coming together that's crazy. Because I can see why institutions would be so interested in this. Now, tell me, you probably talked to some institutions about this. What kind of reception have you gotten with this idea?
I was called into a meeting with a what I'd call like a first-class global fund yesterday. Who said that Bumper's popped up on their radar. They want to just kind of get the inside track. They wanted to understand our aspirations in terms of a regulated version of it. This is they've asked to remain anonymous, so I can't kind of stipulate who, but they are hundreds and hundreds of millions of dollars in this fourth fund that they're raising. And they realised the opportunity and extremely interested, obviously, to kind of have another conversation once we're launched, because we're kind of heads down stealth mode at the moment, just focusing on that. We have been approached by other very large banks who are just very interested in the notion that someone has beaten Black-Scholes. I mean, that has, like I said, it's been the only game in town for 50 years. It's time for someone to crack that one open. But we're not really interested in having those discussions right now. I mean, we have to become extremely blinkered and laser focused on getting ourselves to V1. And what I'd love to do is just to explain to you what I foresee to be the kind of milestones that can get us from here to launch. So liquidity provision program that started yesterday, and that's been launched tremendously well. Next, at the end of this month, so March, we'll be launching a DAO governance smart contract that will allow community to start to have much more meaningful engagement with the protocol. We will then move on once the coding is finished with Digital Mob, and we're expecting that to be soon. We have been building this in the background, so we built the majority of the protocol. We're just down to the really tough last bits that we needed the modeling to inform us on. So we're now on that kind of final straight with Digital Mob, and we hope that will be in a matter of months that we can then release a beta version. It will be closed. We've taken that decision. We don't want to release the source code just yet. So that'll be a closed beta version. And once that's done, we then go for our final smart contract audit. This will be our third smart contract audit that will be that final kind of belt and braces on the protocol. And following that, we then have already a SEX listing that we have put into place, and we'll announce that nearer the time. We have a market maker who we think is a world-class, one of the best, who will be managing the liquidity, not only on that centralized exchange, but also on the V2, V3 Uniswap. And then that SEX listing and market maker will follow 2 weeks on with the launch of V1, which will get out. And that, like I say, that's something we want to get out in Q2. And then we are straight into V2 building, because I think some of your listeners already are asking about layer 2s and cross chains and all those types of things that we want to get stuck into.
Yeah. Follow-up question on that. You probably, I imagine you're under an NDA. You can't say which centralized exchange, Can you tell us, is it a tier 1, a tier 2 exchange, a tier 3? Like,
Yeah, sure.
right now, people can only get it on Uniswap. And so it's not on a centralized exchange, and this will be a first on a centralized exchange.
Yeah, it's a good question, and I'll be really honest about it. There is no chance that we will get on a tier 1 exchange in our current state. You need to have lots of wallet holders, lots of volume, lots of traction. Now we're at the beginning of that process, right? So which is why your users are very adept at picking up these projects early. I would call it a solid 2.5. 2.5 kind of tier. One you would have heard of and feel comfortable.
Yeah, one that people can easily get on it and then buy it there, so they don't have to pay Uniswap fees.
Exactly. Yeah, exactly.
Okay. Yeah. Well, it's really exciting to see all of this coming together. And so, gosh, I had a second question there. Let me just look into the comments while I think of what my follow-up question was. So the liquidity providing right now this just opened up, or I forget what day, was it March 1st that this opened up, that they could provide liquidity, and so that they know if they want to earn some bumper tokens. This is heavily incentivized right now, but only for a short period of time. So what does that look like? What is it? Could you talk about the rewards and specifically what that program is?
Yeah, sure. So the program's going to run for 3 months. So, by that point, we hope we're getting very close to launch. The rewards come in 2 forms. So the first way is when what you need to do is deposit equal valuable amounts in Uniswap of Bump and USDC. So you can put in $100 of each. By doing that, the Uniswap DEX uses those funds in the automated market maker along with everyone else's pooled funds in order to allow trades to happen. And each time there's a trade, you receive a share of the fee that's been generated by Uniswap. So that is fee generating. But to really turbo boost this, we are also offering our LPs a share of 20,000 Bump tokens that's going to be distributed each day between now and 3 months' time. So that takes us March, April, May, end of May. And so what we try to do is we want to show our support to the community, to the people that are going to promote this, the people that are going to use this. We want them to benefit, which is why we've put in what we think is a really solid incentive for those participants to come on board. And we would then hope that once we then come out of that, we're now into protocol launch. We're now seeing people having to buy the Bump token because they need to use the protocol, and that should just help kind of kickstart the whole process of it really taking off.
I wanted to share this screen. So for those that aren't familiar with our website, and the best way to get to it is I always go to CoinMarketCap, because there's all kinds of like duplicate fake sites out there trying to scam people, especially if it's something you want to connect or have to connect your wallet to. So I go to them through CoinMarketCap. So I put in Bump or Bumper, and I find Bumper like we see here. And then I click on the website directly from there. And then you can connect up your say MetaMask wallet if you're interested in providing that. Specifically the pair, I just, for informational purposes, it's this pair here that you can see under markets on Uniswap. So Uniswap version 2, the Bump USDC. So you would click on this, then you would go to trade on Uniswap, but then you actually want to provide some liquidity to this pair. And then you would come back and you would then stake that liquidity providing token on this to earn some incentives for those that are interested. Now, Bump's done a number of things in the past year and a half that's allowed us to earn some Bumper tokens. I presently have a bunch of my Bumper staked and getting some additional Bumper. I'm considering hitting the eject button to provide liquidity because, gosh, those rewards are really juicy. I was just looking at what is the amount of liquidity right here on this, and there's only 6,000. Maybe that's trading volume. It's not telling us what the depth is, but yeah, it looks like those rewards are going to be pretty juicy for those providing liquidity.
Yeah, and I think it's worth just kind of observing that the token price really, which has been in the doldrums because we've just been quietly building in kind of closed dark rooms. The token price really was kind of bumping around about 2.5 cents, 2 cents, something like that for most of back end of last year. So what we're now seeing is now we've announced digital mob, we've announced the liquidity mining just yesterday. We're announcing the DAO, we're announcing beta release, we're announcing SEX listing and launch. That's now starting to move the token price, and it's tripled really over the last kind of couple of weeks, and we want to keep pushing on that.
Yeah, unfortunately for all of us, because I just bought some at 7 cents, but I was like, dang it, I really like that 3 cent price. It was amazing. What's interesting about the crypto market, and the reason I bring it back to like stories that people can relate to, like Axie Infinity, is like the early days, there's not all this glitter and glam, and like this undiscovered project that has this idea that's revolutionary that hasn't happened yet. But once it has happened and people get it, well, the prices are no longer cheap. And so that's the reason I'm so excited about your project and follow it so closely and talk to my friends about it. In fact, a lot of my community members follow it super closely. Sailing on 2021 follows it even closer than I do. He just said, looking at my position now, 142K pool balance, 13 plus hours. I think I'm going to have to increase my position.
So that liquidity provision program is working well then. So that's gone from 0 to 142,000 in 13 hours. That's solid community backing.
Yes, and they get it, right? The people that understand where this is going, and it helps to have some kind of finance background to understand these problems that you're solving. So there might be some people that just happened across this video and they're kind of getting the feel for it. Congrats to them. That's like hitting the jackpot, because like, you know, I talked to people about this idea of how crypto was going to revolutionize video gaming, and that came to pass with both Gods Unchained and particularly Axie Infinity, just like I thought it would. What you're revolutionizing won't just revolutionize, what's so exciting to me about it, won't just revolutionize decentralized finance. It'll revolutionize finance too, because finance will find ways to use this tool that smart contracts really allowed to be able to happen. And I'm sure as the finance people hear about it, they're like, wait, what? Oh, tell me more. Like, it's not even a conversation. All you have to do is say, oh yeah, we're able to beat, is it Shoals?
Black Shoals.
Black Shoals. And they're like, tell me more, right? That's probably how that conversation goes.
Yeah. And we already have 2 university professors from RMIT that want to base their research and a thesis paper on Bumper and this new kind of approach. So we're starting to see kind of traditional minds and finance, kind of migrate over, because it's where all the interesting developments is in DeFi in my mind, and that's where the clever minds are starting to coalesce.
This is so exciting to me. Well, gosh. Anything else that you have to share coming up, or can you give us an idea of what's on the horizon? So you talked about centralized exchange and some other things in coming up. That was what, couple months out?
Yeah, we would hope by Q2 is what we're circling for that,
Okay.
for the launch. With regards to liquidity provision, if any of your listeners are interested in taking that opportunity, there are guides on our website that kind of give you a very kind of step-by-step, easy understanding of how becoming a liquidity provider, so be sure to check those. I think the kind of gambit for us now is we've cracked the simulation and we're kind of underway on the final builds to get us to V1. We're now thinking about what V2 needs to look like, and I think some of your listeners again have put in some suggestions, and if anybody has any suggestions, we'd love it if they jumped into our Discord and just maybe kind of wrote them there so that we can kind of collect all those together. But we'll be looking to, the thing about Bumper to really understand is the way it's been designed is that the higher the TVL and the higher the price of the Bump token, then by design, Bumper becomes more robust to volatility. So this is a land grab. We know we're the first ones to crack this. We know we're going to be the first ones to market. We have a big marketing budget that's going to announce this once we've kind of got it out into the wild. The gambit for us is to grab as much of that risk protection market as we possibly can, as quickly as we can. And one of the good ways to do that is to diversify out. So we're going to be looking at going to go across different chains, having layer 2 to speed up some of those kind of computational aspects of the protocol, and then obviously expanding the list of which assets can be protected, which at the moment at launch would just be Bitcoin and Ethereum, but we'll slowly work our way through the top 10 market cap, obviously accepting stablecoins, which don't need protection. Well, they didn't used to. But we would love to hear any other thoughts people have on the types of features they want to see, whether that kind of collateralized debt utility case is something people would like to use, or the margin call liquidation protection, because we are now planning out the rest of our year of how we deploy our tech resources to just make Bumper just eponymous in the market. As when you think about risk in crypto, you just Bumper it. That's the gambit for us. That's where we want to be by the end of the year.
And that's why specifically the name, just like bumpers kind of wrap around a car to make it, to diffuse when there's an accident, right? It really can make what used to be serious not so serious, right? So it's like a protection. So I like the name on it, right? Because it's catchy enough, and in the future they just might call it bumper, even when you end up having competitors, kind of like you don't call tissue paper, you call it Kleenex.
Yeah, absolutely. And I think when you think about the kind of meltdown we've had in crypto over the last, whatever it's been, 8 months, right? What that was really due to was people being over leveraged, right? And those positions being liquidated, and that then cascading down to the next person that had exposure to that person. What Bumper could do is act as a kind of breakout fuse box in that, and stop those cascading liquidations, because if somebody's bumpered in there, that's it. They won't get liquidated. That's as far as it will go. And so Bumper could play a fundamental role in just bringing, a little bit less kind of anxiety and high volatility to crypto.
Sailing had another question. He said, when we get to launch, how are you planning on maintaining or increasing engagement?
Yeah, good question. That is a very good question. I think the answer to that is to keep it innovating, essentially. So this notion that we're now starting our workshops on V2 is going to be a key part. I think the line to kind of sink in here is that our view is starting to coalesce around the fact, Bumper we think is just a fundamental breakthrough, right? But we also think Bumper's not the thing. Bumper's the thing that gets you to the thing. It's what you can do with a token where you have now removed the downside volatility. What can you do in crypto with the token with that property? And we want to start building out those services that use Bumper as their building block to do X, Y, and Z. And I think that is the way to keep people engaged, keep the use cases widening, and keep listening to community about what they want it to do, what features they want, so that we become very harmonious with the use cases and the market needs.
Great. Another question is, or statement, BeanTech says, I'm also providing liquidity. Looking forward to what's happening in the next 6 months with Bumper. I also plan on using Bumper to protect my positions. And one of the things that excited me about Bumper is I heard what it could do and everything. Is one of the problems that I have, and this happened with Axie Infinity, is that I sold too early, right? So I had made 100x gains, and I thought, okay, I have no downside protection if it reverses, so I've just got to take my gains, and it's 100x. I can't complain about that. It ended up going 3,000x. Wow. I couldn't explore further upside. I had to just hedge my risk, and in order to hedge my risk, I had to sell, which meant I was completely out of it. If Bumper had been around, I could have just bumpered my position at, say, the 90% level and paid a little bit of fee on that. Yeah. And then I could have explored further upside, and man, was there a massive upside compared to that. And I would have protected my downside, and should it have reversed against me and gone way down, I could have just cashed it out and protected that 90% position. So I'm really excited about what your tech allows even investors such as myself to do. But I get it why the institutions themselves too will be like, oh my gosh, this is world changing.
Well, yeah, quite. And in that example that you've given, the premium you would have paid as the price of Axie Infinity shot up would have been negligible. So you'd have had that kind of comfort. You can sleep at night, and it would have cost you a nominal, totally nominal, small amount.
Yeah. Chris Ashby asks, what is what is it that is supposed to keep people in the USDC bump pool at program launch? So beyond the massive incentivized period.
Yeah, I'm not sure whether Christo is talking about the liquidity provision program, where we've got that kind of 20,000 distribution day, or whether Chris is talking about the USDC pool that's actually in the protocol, which balances the asset that we protect. If it's the former, we will start to reduce down the incentive post-launch, right? So this is something to kind of bootstrap and kind of kickstart us off. What the kind of logic is, and again, this isn't financial advice, I'm not trying to kind of speculate or anything like that, but the logic is that post-launch, people start using the protocol for the first time. They have to buy bump in order to use the protocol. That then presents a use case for the bump token, which should lead to the token price increasing. So for those LPs, they should see a kind of benefit in their kind of ROI. Obviously, with the USDC, you just have to put that in. If you put in a trading pair to AMM, you can't just put in bump on the one side, so to provide liquidity.
Yeah, makes perfect sense. Let's see what other question. One of the questions from Eli said, can we get a video on how to buy bump token? And then Sailing responded to him. Bumper has one on their Discord showing how to buy it on V2. So
yeah, it's on V2 and V3. So V3, you can buy bump and ETH pair on that's V3. And on V2, it's bump and USDC pair.
Perfect. And there's tons of liquidity now on the USDC pair on V2.
Seems to be.
Yeah, pretty deep. Perfect. Jonathan, thank you for your time.
Pleasure.
We really appreciate you joining us, sharing what's going on. We'd love to have you on again in a couple months, especially if the protocol is ready to launch. I'd love to have you back.
Sounds good. That sounds good. Good to be on Crypto Rain, as always.
Thanks so much. Oh, my goodness. So I don't know if I'm communicating well, why I'm so excited about this and why it makes me lose sleep at night. There's been a few times in crypto where I've been super excited about an idea, and that this idea, if it comes to fruition, will be world changing. And this is one of those. And I like, these gems or diamonds in the rough. And what people don't realize about diamonds in the rough is when you pick them up and stuff, they're all scratched up. They don't look shiny. They look almost like, I don't know, a plain rock that's a little bit transparent. And it isn't till later, when it's been all refined and everything, that it looks like the diamonds people are used to. But by that time, the value is so much higher. And so I really like the potential of this. And this is why it was the number one on my mind in December, when I was talking to some community members about what I was wanting to buy a lot more of and buying more of. And Bumper was on that list. And I have since been buying, since December, even more. And I already have a decent sized position in it. I hope you can all see why. Thank you, everyone, for joining us. Remember, the crypto market is slow right now. There was a time that you could have bought Axie Infinity Land, Mystic plots for about $50 worth of ETH. They later went to $100,000 to $120,000 a piece. Why? Because other people started to realize the potential of this idea and concept. Now, will Bumper see those kind of returns? I hope so. I have no guarantee that it will, but that's why I'm very excited about it. For all of you who are new to the community and don't know what this rap is all about, I wrote the words. Charlie from the UK performed it. This is to reinforce the principles that I share on investing that helped me do really well in the space over time. And I think these principles will do really well for you too.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, shit, right before you could, was told to buy when it was pouring like a rainmaker should. Buy when it's down, don't chase the boats that I miss, cause I always make the time in mind. I take the one out cause I'm patient like that, and I'll wait for the right time. I'll sell when it's high, I'll buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't lead with my heart. Principles are simple, when it's boring, just gotta be smart. Sell when it's hype, like all the channels they pump it. That's when I was selling, go parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Time is never better, the time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, to study and to know that nothing comes easy, but with knowledge the game show. Sticking out this wrong, cause soon will come a bear market. Learning and growing, and when it's slow will be the target. Naysayers come out, Bitcoin is dead. The